Hey everybody, I hope you're all doing well. First video of the year, 2023. I'm excited to jump into this year. I was saying to my Discord group actually that 2022, don't get me wrong, it was a great year in terms of growth, but 2023 is just going to be insane. You know, it's going to be on levels that we've never been on before. And, you know, I actually really mean that. Like, I've not had this positive mindset towards going into a new year than I have, you know, with 2023. So I'm excited for that. Ignore what's on the screen. I just literally attempted to do a video, but I accidentally cut off for some reason. I'm not too sure why. I think I've accidentally binded it to a one of my key binds in the past, and I just forgot the key bind, so I need to sort that out. But yeah, anyways, I feel like 2023 is just going to be an insane year. And I always say as well, if you have clear, concise goals and you're very specific on what you want in life, and you have a passion, you know, you have an intention, and I feel like, you know, you are just going to achieve success, and there's no reason why you won't. So yeah, just, you know, for those of you that are, you know, just starting trading or just, you know, on the journey, like, it's a never-ending journey, don't get me wrong, but you know, you guys know what I mean. For every single one of you, just, you know, it's your friendly reminder to just keep going, and 2023 is going to be a great year if you put your mind to it. Now in this video, I'm going to be going over how to measure momentum, so I'm just going to delete all that. A lot of you asked me in this post, I don't know if you guys remember, but I did a post on measuring momentum, and I also did this single post for it as well. You know, I had quite a lot of DMs saying, can I record a video for it? So I thought, you know, why not? And I also said I would, so, you know, here we are. So I'm going to pull up a blank chart, and I'm going to just go over the mapping process, the thought process behind it, explain a little bit about it, and then I'll show you some, you know, live examples. But it's very easy once you understand it. It's just a simple little concept. Just don't overcomplicate it. It's the best thing to say. Just don't overcomplicate it. Just literally look what I'm doing. It's very simple. So essentially what you do is, right, let's say you have your POI here, right? So let's actually do a better scenario. For some reason, in terms of visual, I'm just better off doing bearish ones. As you guys can see here, right, what do we have? Right, we have a POI, we have, you know, yeah, we have a POI. So what you want to do is, first things first, you either want to go over to this measure tool, all right, and you can grab this from the, you know, high to low, whatever, right? But the only thing is, when you draw another one, it will go off. So if you want to do it that way, just remember what the bars is, but you might just find yourself checking over and over. So if not, just add this to your favorites toolbar. So if you don't know what favorites toolbar is, this is the favorites toolbar. If you don't use that, all you want to do is you just want to come over to here. It's the, you know, this one down here. You see the love heart above or below it. Then you just open that, come down to date range, add it to your favorites if you haven't already, and then if not, just use it. Then what you want to do is, when you have your POI, you can either mark from the candle that, you know, obviously is the POI. So in this case, it'll just be this high here, and then you want to map it to the low, right? Like that. So what you have here is you have the measured from the high to the low. Then all you want to do is you want to measure the exact same, so from the low to the same high, or to the same where the POI was. Right. And now what you guys can see here is, remember what the key word was to focus on bars, not time. So what I mean by focus on bars, not time, is simply just focus on these bars, not what the time's saying. So the bars here in this bearish one, so what you're doing is you're measuring momentum, right? So as you guys can see, the bearish move to the same, you know, point in price is 6 bars. The bullish move to the same, you know, point in price is 4 bars. So that sort of tells you, what can you read from that? Well, the bulls clearly seem to be a bit more in control in terms of momentum. Now this can help invalidate POIs, because people can measure the momentum pulling back into the POI. So if it pulls back, let's say for example 2 bars, and you know the bearish move was 9 bars, well then obviously the bulls are in control because they have less bars, so they have much more momentum within the bars, you know. So hopefully that makes sense anyway. That's sort of like the easy way to explain it, hopefully. But that's the show you do. So if price, you know, comes back, like let's say over here, then you just want to measure again, it's the same low. to the the current high, or when price within the POI, and as you guys can see, that'll be 11 bars. So now this bearish move is 6 bars, this is 11 bars. So this setup looks valid to take, because why? But because price is pulling back slowly into the POI rather than quite aggressively. It's not outpowering the bears. It's clearly the bears are still in control, because it's pushing price down a lot quicker than it is pulling back, or vice versa for a bullish bearish market, whatever, right? So we'll do another example. So let's say price moving bearish, we just chalked maybe bullish here, and now we have this POI here, right? So if you guys don't understand the thought process, basically let's just say price chalked bullish, all right, off a higher time frame demand zone. Okay, price has now came back into this POI. We have a POI here, and it lines up with this range low as well. Let's say this is the range low and this is the range high. And what we're going to do is we're just going to measure this low all the way to that point, peak in price. And as you guys can see, that took 10 bars. Maybe let's just drag it out just for this sake of the video. And obviously I'll show you some real life examples as well. But like I said, it's fairly simple once you understand it. Literally all you're doing is, once you have on your POI, is you're going to measure that POI from, let's say, if it's a bearish market looking to sell, you're going to measure, you have a supply zone marked up. You're going to draw from the POI, the candle, or the high from the, sort of the supply zone area, and then you're going to drag it to the low, so the peak, low in price. And then obviously what you're going to do is you're going to repeat the process when price gets to the POI. It's just a quick, simple thing to just check that momentum's in your favor. Like I said, it may not, work all the time. Nothing works all the time. But it's just a simple tool that some of you may find helpful. You don't have to use it. I don't always use it myself. So it's up to you if you want to use it. It really is. It doesn't matter if you do or you don't. It could just be a simple tool. It could be that 1% that extra for that, one person out there that's watching. So, just take it with a pinch of salt. And if you guys like what you see, then obviously go out and implement it on the chart through back testing, see what you think, and obviously go from there. But yeah, as I was saying, you just, in the bearish scenario, measure obviously the high or the POI to the low, the peak low, and obviously vice versa. When price taps into the POI, measure the low to obviously the current price. Then obviously whoever has the shorter bars obviously is in control, because, well, they have much more momentum. And hopefully you guys understand what I'm saying by now, but yeah. So again, what you want to do is measure the high down to the low. Right, and to the, where price onto the POI, 13 bars, 10 bars. Okay, I'm happy to set this up. Why? Because obviously the bulls are in control. So let's do some real life examples. But hopefully you guys get that, and that's what I meant by focusing on the bars, not the time. Because as you guys can see, if you just pull that back up, I wasn't focusing on the time, right? Because even though this only took 10 bars, it still took 4 days, 16 hours, whereas this took 2 days, 4 hours, right? And that's usually because it was it'll be because market open, so Monday to Saturday, Sunday, right? So don't focus on the time for that particular reason. So coming on to the charts, what we're going to be looking at here is, again, just looking at the POIs. So if we just take a look at, we'll do this one because this would be a valid POI, right? That would be a valid POI for me, based off that. Right, so if we just look at this, right, what we're going to be doing is we're just going to measure the low or the candle that created the POI. So it'll be this one anyways, and you're just going to go to the peak high. So it'll be this high here, right? And as you guys can see, that only took 3 bars. And if it's like this, you can just count to like 1, 2, 3. But as you guys can see, that took 3 bars. And if we just measure the opposite, so for example, price pulling back into the POI, obviously we want it to be a lot slower, so we want more bars pulling back. So just write that down if you haven't already. We want more bars when price is pulling back, because that shows, slower momentum, and it sort of works out in our favor. So what are we marking to? So this would be the lowest point. Obviously, if you were to take this trade, I believe, if I'm going to be honest, you would be looking at this low here, so it would be 2 bars. So, whether you take that trade, that's up to you, but as you guys can see, had a little short-term reaction, maybe tapping something here within a lower time frame, came back, dropped lower, and then this is the real entry. So, this, putting in a new low here seems more reasonable to take the entry based on this momentum. So, yeah, 8 bars to pull back, 3 bars to, take off, pretty much. which shows obviously, you know, the bull's in control. So, you know, that obviously if we're looking to buy, obviously we want the bulls to be in control. If we're looking to sell, we want the, you know, the bears to be in control. As simple as that. Go and find another example. Let's just say we have a POI here, because why not, for this video's sake. Price worked out the low anyways. You know, it could be a sweep entry for those of you that are in the course. Yeah, for those of you in the course or the Discord, you know what sweep entries are. And in short, essentially just when price takes a significant high or low. But we must wick it, and there's certain rules around it. But anyways, as you guys can see here, obviously 2 bars take off. 1, 2. We could actually measure. Yeah, we did measure that high. Okay. And then obviously price pulling back. 11 bars, and you know, pretty much there's your answer. So buy skew now. Who's in control? 2 bars take off. 11 bars pull back. We're looking to buy. Well, it'll obviously it'll make sense to look to buy. You know, but if we were to maybe let's have a look at this POI. Right, go in with like the overall, I don't know, swing range. We'd have this high to this low. This here, right? And that'd be 21 bars to the downside, 30 bars to the upside, so that shows a bullish momentum. And like I said, it won't always work because, you know, even though it did sort of work here, you know, if you're targeting this low, it'd be quite difficult because obviously pull back. But, you know, if you were going based off this, you know, and let's say you kept this up as well. You know, obviously, if you're looking at these setups, if you're going to grade them in terms of like A and B, like A being the setup, like the higher probability, and B being the lower probability, then, you know, this would probably be, you know, a setup, and this would probably be a B setup because of the momentum, if you were to just, you know, obviously include that. But yeah, like I said, you know, you don't have to use it. It's completely up to you. It just, you know, if you have your POIs within like the lower time frame ranges, it works probably better on the lower time frame anyways, because obviously we're not going to be looking at the H4 for our entries. You know, we're going to be looking at the 15 minute, the 1 minute, so make sure you get on those lower time frames and take a look. So for example, you know, we need to look at a past one because we don't know what's going to happen here. But yeah, that's pretty much all you do really. Hopefully you guys understand it now. I'll show you a couple more examples as well, just in case, just to really drill it in. But yeah, what I'll do is I'll probably show you a couple more examples if I can find any. And usually I would know because I usually am on the charts all the time, but however I haven't really been on the charts the past couple of weeks because of the holidays. And this is literally my first day back on the charts. It feels great. Let's just look at the 1 minute. Yeah, this should be a valid POI. So, using the 3 candle high and low, we have this nice little naughty range here. Right, and again, this is a nice example, example of what we mean. So what you're going to do is you're going to measure where the POI is. So order block, right? So when you mark out, let's say your order block, this here is not an order block. This here is just what I call a POI, supply zone. This here, you know, would be an order block, but this here is not an order block. Just this is the kind of like create the imbalance push. But let's just call it, for the sake and for easier in the mind, let's just call it an order block. So when you mark up your order block, all you want to do is mark up that candle of the order block, right? That's all you need to do. You don't need to overcomplicate it, right? You can mark from the high, but again, that candle lines up anyways with the high, you know, usually like in this example. So we got this candle here that created obviously this order block, you know, POIs, which we're looking to sell from. Price obviously to this low is 6 bars. And then what we want to be doing is when price pulls back, we can, you know, when price is in the POI, we can measure the low into the, you know, the current price. Now price may not even be this high, that's fine. Price may only come to this high, that's still okay as long as it's matching with this candle. So you got 6 bars to the downside, 13 bars to the upside. Obviously, you know, we're going to be looking to sell from here, so that just makes more sense to sell rather than if it was like, you know, let's say 3 bars, because that indicates that, you know, bulls are in control, and, you know, we could potentially see more bullish price action. So, you know, like I said, it's a little sort of thing you can add a little bit extra in terms of probability if you want to use it that way. And yeah, you can implement it however you want, but that's essentially the process behind it. You just mark the peak and price. Don't overcomplicate it. It's literally nothing to be overcomplicating. You're just measuring from when you mark the POI to the major swing point, and then back through again into the POI. So do you know when you have, like, let's say you mark out your POI like this, right? So let's say your POI is like this. Literally all you want to do is, when price pulls back into the POI, oops, when price pulls back into the POI, just quickly measure to the low, drag it across, drag it across, and then boom, there you go. That's as simple as that, and it only takes a couple of seconds, as you guys can see. You only need to draw it up. You got it to your favorites tool, it takes 2 seconds, and you just basically, again, for the pullback, you want more bars. If you're looking to sell from a supply zone, you want the bears to be in control, right? If you're looking to buy from a demand zone, you want the bulls to be in control. So with that pullback into that demand zone, the bearish little pullback, you know, this demand zone here, and then, you know, the pullback into it. This pullback phase has got to be longer in terms of bars than it has, you know, taken off of what created the POI, right? So just remember that it has to be longer on the pullback phase in terms of bars. But yeah, that's pretty much it, really. That's generally it. The only thing I could do is show you more examples. We had a nice example somewhere. I mean, we could use that one maybe. If we were to look like this order block here, that could be a valid POI for many. You know, you got the extreme POI, impulsive move, liquidity. Alright, so let's say you had this here, you'd mark up from this candle, because obviously that's what you drew from, and then you just want to mark this, the lowest point in price, which would be obviously this one. It wouldn't be this one because price didn't pull back into the POI. It would be this one because price did pull back into the POI. This may also help you understand the swing ranges as well in terms of mapping. And as you guys can see, it took 13 bars up, 37 bars down. Okay, we're looking to sell. What do we want? We want the pullback phase to be longer in terms of bars. Unfortunately, that's not the case here. It's up to you if you want to still execute. Obviously, if you weren't to execute, then, you know, long term you were right. However, you may or may have not got a couple of nice profits in it, because looking at this now, you know, in terms of adaptive entries, if you're in the course, you would literally, these are literally like free entries, you know, targeting these lows as well. But yeah, that's, you understand the thought process behind it now. So it's up to you. Up to you how you want to use it. But yeah, hopefully you guys make sense. What I will do is, well, I'll link below in the description the links to the Instagram post, so that way you can go and look at them as well. And if you need any more examples, just hit me up and I'll send a couple more examples. They're sometimes in my charts anyways, so if you're already in the Discord, then just keep an eye on the charts and I'll mark them up for you guys. And yeah, it's just a simple tip, and hopefully you guys can use it to your advantage. If you don't use it, then fair enough, it doesn't really matter. It's there if you want it. And yeah, happy holidays, happy new year, I love you all, and great to be back. Have a good one, guys.